Hey guys, what's going on? Coming at you with a Wednesday morning video. So today I want to do something a little different. Obviously, the CPI report came out yesterday at 8:30 a.m. Eastern time. So I'm going to do something a little different as I didn't really buy any stocks yesterday. So I kind of just want to explain my thoughts on the CPI report. This is something new that I'm going to do. I know a couple months ago when I started making this channel and these videos, a lot of people were giving me a bunch of hate, being like, oh, you don't know what you're saying, or you don't know what you're doing, or excuse me, they were just asking, things like this. But I feel like rather sometimes than just saying like what stocks I'm buying or where they're going, this information as a long-term investor is very important. So you have to understand what's going on in the market. It's just good practice. Obviously, if you're a long-term investor, which I am, and you buy good fundamentally stocks with strong balance sheets, in this case, for what's going on in the market, and you just know what's happening, good companies are going to succeed. They're going to grow. America's not at their best days, so you're probably good in the long run, but it's always good habit. It keeps your mind, how would I put this? It doesn't make you panic. A lot of people get paper hands when the market goes down, or they panic. And a lot of times people panic is because they're just not aware or familiar of things. So this is the Consumer Price Index. If you're not familiar with it, this basically measures inflation for everything. I actually have a printout today just so I could just run through some things if I have some time at the end of the video. But basically this comes out every month. So it's just something you just want to keep an eye on. It makes you feel a little better about your investments when they're not doing great. Obviously, we've had a rough December, January, and February, and half of March. We rallied back past those lows, gave half back recently. It's fine. I actually bought on the rock bottom, so I feel good about that. And I've been just slowly nibbling at positions that kind of been stuck. So basically, they predicted the consumer price index was going to be 8.4%. in March. Obviously, it's a month behind, so it lags a month when the reports come out, obviously, because the month has to close. Came in at 8.45, so that's pretty close. I mean, I honestly, in a couple of videos, before this information came out, I said it wouldn't surprise me if it was 9% or 8.7. So 8.5 before I even read this number. I think that's good. The market, when they got this information in the morning, the market actually did rally pre-market. So people were excited about this report. I think that's fine. Personally, I think we hit peak inflation. That's my opinion. I've been saying this for months at this point. We have easier comps to hit year over year starting now, because that's when the vaccine came out last year, readily available. Things started opening up. People were spending like crazy. And there was the third stimulus package rolled out around this time last year. So it makes the comps easier year over year, or month over month. Well, year over year starting now, because it really started ramping up the inflation last year right about now. So it makes this number will pull down in the next reports. It's going to be harder to keep it sustainably going. We stop stimulus, we stop bond buybacks, and all that stuff. So that's good. So this I give it's bad, but it's good, if that makes sense. So it's the highest ever. I think it's peak, so it's kind of good. We were around this. They were kind of spot on. Month over month, it was 1.2%. This matches February, so that's good too. I mean, I think that's, it was as expected, right on, so that's good. So good. The food and energy, this is even better. It was a 0.3% increase. This is down 0.2% from February, so that's good. So the food and energy are going down in inflation, so that's also good. So all three of these things in the grand scheme of things are good. The market had all this priced in. We all knew inflation was going to be crazy high because of the war, Russia, Ukraine, and the oil, and the wheat, and the energy. We all knew it was going to be crazy, this report. And then obviously the comps were really, just things are expensive, like the cost of oil and everything. So we knew that. So it should get better. The cost of oil has gone down significantly since last month. It peaked at like 150 a barrel. Now it's sitting around, on average, I'd say 100, 110. So that's a big difference. That's a 33% difference. So Fed meeting, this is big. This is the first week of April. Jerome Powell is going to speak about, the rate hike. He obviously said he was going to do an 04 style rate hike. He did a quarter point. The first meeting when he said he was going to start doing it, if you look at the 04 style rate hike, it was just quarter point until inflation was under control. I think they did it over a dozen times in 04. So this would be the second time. I think because you saw this decrease, this not go crazy, month over month match February, I really think he's going to stick the course and do a quarter of a point. The market's kind of doing itself. So that's my opinion. I've been saying this for a couple of days now. I still think that. The market has a 0.5% priced in. The consensus is 80% of the market has this priced in. So if a quarter point happens, it's going to surprise the market in a good way, and it's going to rally like crazy because they're not rate hiking as quick. So I think this is going to happen. So I'm in the 20% minority of what's going to happen here, and I've stuck to that the past couple of days. This report just makes me feel like they're really going to do it. Now, if this was like 10%, this was an increase versus, month over month, this was out of control and way higher, not down, yeah, they'd have to aggressively rate hike and probably do a half percent or 0.75%. CNBC, I was actually listening to it in the background today, just with headphones on all day yesterday. It's so funny. You have like most analysts that come on. I really think they're just trying to scare investors. They want to keep this market down. They're saying how, a 0.75 rate hike is going to have to be. This report wasn't that great. Peak inflation isn't over. Like, it's just so funny. Like, if you do the research and do your own due diligence, it just doesn't make sense. Like Jerome Powell is very straightforward. The Fed controls basically what the market's doing right now. Like, there's no way inflation next month is going to be higher than this. I would, bet some on that. It's going to be under this. It might not be much under, but it's going to be under 8.5. I'm calling it next month. So I'll put my neck out there and say that now. Let me see where I'm at here. How many minutes do I have left? Okay, so I got 4 minutes. So interesting thing with the market, it opened up super green this morning based on this news. People loved it. I don't know why. I think the market went back down throughout the day, just bled out. It like rallied up pre-market and slowly bled down throughout the day and finished red. So Dow, S&P, and NASDAQ all finished down 0.25, 0.34, 0.30. My portfolio finished negative 0.84 today, so mine was down too. Biggest losers I had were PayPal and Shopify. PayPal's a big position of mine. Shopify is also. I made a video yesterday saying I bought at 109. It's at 106.72 right now. I am going to buy again if it goes to 105. We'll see. Shopify, it lost all its gains from that 10-to-1 share split news. This stock I love at this price. I'm just kind of being patient with the market. Both these positions are pretty well built out. So these are kind of on my watch list right now to where I'm interested in buying both these. If I do, I'll make a video and let you guys know. So, I don't know what I wrote here. I have no idea what it just gave away all profits from the 10-to-1 share split. So that was for that stuff. So yeah, so that's basically where I'm at. Before I end this video, I'm going to make this real quick and I'm going to just go through some of the CPI. Like I have the sheet in front of me. But before I do that, if you guys like a video like this, I can make these and explain to you my thoughts. But overall, I give this report, before I get into the details of the paper, I give it like a B+. I give this whole CPI report a B+. It was the worst peak inflation we've had for decades, but it's actually good. So if you guys like this video, make sure you guys subscribe. It really helps me out. I'm trying to get to 700 subs. I know I'm really close. So I'm going to try to bang this out in a minute and a half here. So in case you guys don't think I do like my own reading or research or stuff like that, I'll just give you guys a little sheet here. So these are the first 2 pages of the CPI report. How I do it and what works for me is the yellow is always an increase. The blue font is always a good thing. So yellow's bad, blue's good. So we have a little bit of blue in here. So basically, obviously, this is the April 12th report. How do I do that? It's 8.5 before seasonal adjustment. That's good. Well, that's what it was. The biggest increase on the sheet was energy. Energy and gasoline. That makes sense. The cost of barrel of oil went up to 150 during this report. So it makes sense. It had an 18.1 increase. That's massive, but that's a commodity. It's not sustainable. It's already coming down. So next report, we're going to see it less because the barrels are at 90 to 110, let's call it. So that's going to go down. Good. Used, I don't know if you guys can see this, used cars and trucks, it's down negative 3.8. That's good. If you look at the used car market or you were selling a car, I actually sold my second car in September. Reason being is the market was insane. It was a performance car, got a bunch of money, Glad I got rid of it because I took advantage of the market, but that's a whole other story. Anyways, yeah, used car pricing is going down, so that's good. New car pricing, it's only up 0.2 month over month, so that's really not that bad. It's slowing down. In February, it was 0.3, so it's good. You know, we're slowing that trajectory down. So, and then this is just little like notes basically on what rose. I mean, all these numbers are the highest increases since like 1981. You know, just crazy dates. Like I wasn't even born. But obviously the blue I highlighted here, which was important, was the index of used cars and trucks fell 3.8% in March. It's the second consecutive monthly decline after a series of large increases. That's a really good sign. I think it's going to continue to go down. So, you know, it really, like, it sounds bad. Like the headlines on CNBC might make it scary, or some analysts might try scaring you out of stocks, but really this is a good time to buy. I think we found the bottom in March, mid-March, and from here, you know, it's going to be painful and you're going to go have some volatile periods, but now's a good buying point. I think this is like peak inflation on paper, and from here it'll be a little smoother. So yeah, if you guys like this video, make sure you like, subscribe. Till tomorrow, peace.